What's going on, guys? Welcome back to another episode here on Let It Grow Investing. Man, another rocky week going on out there. It has been brutal, man. Worst performance on the NASDAQ in about 3 weeks. And the market just keeps getting tanked. So we're trying to brace for everything that's going on here for tariff talks on the 2nd. We've got more consumer concerns. We got a lot of things going on. So let's dive right in. Let's go ahead and see just what we're looking at here. Let me go ahead and pull up this page on Market Watch. I was just taking a quick peek here. Where are we at? We've got, here we go. On March 28th, Dow, S&P, and NASDAQ see worst day in 3 weeks. Consumer sentiment reports stocks post weekly drop to deepen March losses ahead of reciprocal tariffs. That is going to be on April 2nd, right? We got the auto tariffs coming in. We got some more tariffs going out on, 25% on autos, I believe. So there's a lot of different things to digest here. We've got a big sell-off here across the board, but the NASDAQ is going to be the worst performer on the week. S&P in the middle, Dow, a little bit higher. The tech-led NASDAQ, obviously more growth concern, more international as far as chips and software and things like that. So, and production being, around the world for a lot of these different companies. So they're going to be more tariff-driven, more growth rate sensitive, or rate sensitive as well. So a lot of different things there, right? Consumer staples are going to be in your Dow to some extent, right? We've got a lot of different things to look at though. So rough end to the week. But if we go over and look at the actual NASDAQ that was just a 1-day chart. If we swap over here, and we go ahead and share a different screen. We've got E-Trade, right? We're looking at the 5-day. We started somewhere up 18.2, and we dropped down around 1,000 points down to 17.3. So brutal there, right? We started, back at middle of December, we were at 20,204. We've dropped more than 10% at this point. So we are firmly in correction territory. And again, a lot of different things around uncertainty to do with tariffs, with politics, with all the geopolitical uncertainty around the world. So what ultimately does this mean, and really what can we make from this news? Man, I really don't want to get political. I really can't stand the amount of divisiveness from anyone that is posting so many times about politics, right? You're just online, just bashing one party or the other, but you don't realize that we're all just getting pulled down the more that people just do this, right? We're all in the game. We're all, whether you like it or not, if you're alive, you're into some sort of political, what the taxes are going to do to you or your job or anything else. I get that. But I think the divisiveness of people just blabbing back and forth and, hey, you're this, I'm that, and when we just don't get along is just so unhelpful anymore. It's just insane. But we're all along in this game. So I understand the America first. I see some problems. I know that there's going to be pain there with tariffs. But again, how do we play it? How do we take the news that's out there and not just point fingers, but we can actually make something out of this? So I think, there's a lot of, why is Trump pushing reciprocal tariffs? Well, one, I think he's trying to put America first, right? We are at deficit. We are importing more than we export. That was somewhere in this article, somewhere down here in the bottom. I know that it was around there. Why are we narrowing the tariffs? The Trump administration could be narrowing the scope of reciprocal tariffs from what Trump originally proposed. Imposed tariffs on the auto industry. His administration is likely to exclude other sector-specific tariffs that Trump had previously discussed. We saw all that. We've got, some pullback there, right? A little bit. But at the end of the day, I think we're all looking, where can we actually invest? What is really making sense, and where do we want to avoid? Right? And again, I think if you're a long-term investor, I think you got to take a look at some of the tech plays are getting sold off, right? If you were buying a house, say, 2 years ago, and it was $700,000, and now it came down to $550,000, you would be ready to buy that house. Now, the same thing goes the opposite way. If a stock came down 20% and you were ready to buy that stock at $70, but now it's $55, you should probably be thinking, maybe it's a good time to buy that stock, or maybe I should start nibbling into this position, which you can do with stocks. You can't really do with real estate, right? I mean, you can, unless you're buying multiple properties, but if you're buying one house and it's, $50,000. That's the price. That's what you're going to have to pay. You can't, buy a little bit now and buy the second bedroom a month from now to see what prices do. You are locking into that price. With stocks, you have that flexibility to go ahead and buy at 55, buy at 50, buy at 42, whatever, your timeline looks like, and go ahead and build out that position. So I guess my point is, if one of these stocks, like say an NVIDIA, is going to be on sale, let's take a look. NVIDIA had a rough week. We came down on NVIDIA, and now you start getting some more big investors coming out and purchasing this thing, right? We were looking at 120 roughly this time last week, and now we're sitting around 109. 9-10% coming down on NVIDIA. So for me, if you have a long-term time horizon, which I think a lot of us do, right? And I look at some of the demographics of who's listening to the show, and it's majority of people like my age, roughly plus or minus a little bit. But, we have time, right? So if you're looking at this thing and you see a 61% of upside on NVIDIA, you think that some of these trade fears and tariffs are a little bit overblown. Maybe it could be a good time to start buying NVIDIA. Now, is it going to be a tough play right now? Could there be more downside on an NVIDIA, on a Micron? Micron being up 9% and then down 9% and then, kind of kept falling on what looked pretty decent. We talked about this one last time. I won't go too in depth. Could it be a good time to add to Micron? If you're looking for memory chips, this is, the player in the game that you want to be in. So could it be a good time to go ahead and buy this with 46% of upside, limited on the downside, minus 5%, around 126% of upside if you listen to the top analyst? Could it be a good time? I think it could, but I have a long time horizon, right? I'm a buy and hold investor in a lot of these companies that I'm looking at. So I think that it could be a good time to buy some of these. There are some other plays that are out there, though, that I think people have really started catching on with. And I think a lot of these are going to be your service companies. So Cintas, right? The uniform company, or floor mats, rugs, whatever. Could it be a good time to buy that one? Well, I think a lot of people have already gotten into this play, right? So now your upside is 20, but your downside's 20. So a little bit on that average price upside of 5.5%. But I do think it is a safer place to hide out right now versus some of the tech stocks or the heavy growth stocks. Now, I'm not necessarily endorsing Cintas. What I am saying is that some of these service companies start to make a lot more sense. So again, like with a Paychex, right? Paychex was just buying another company, and I forget the name, but I know they're adding more to their business. They've got more cost synergies. I think they were saving around $80 million in cost synergies by buying the other company. So this one has already run up as well, but another service-based company with lower unemployment and things not looking like they're really going to go too far south as far as unemployment is concerned. We've already taken a brunt of that damage, and we kind of know where we're going from here, right? We've heard Powell say it, we've heard Trump say it, and not that they haven't both been wrong in the past, but I'm trying to take an educated guess as to what happens here. So Paychex, right? Again, limited upside, limited downside, and there's really not too much of that middle ground. So maybe these have already run too much. So then I started looking at, what else could be out there? Does ADP, have they not really done much since Paychex has already had that purchase of the other company? Well, ADP's gotten 5% of upside on average. Still fairly limited, right? High is about 16% higher, low is, -2. So if I'm looking at other service industries, and that's where I kind of, that's kind of my forte is in that service space. So I start looking at like a United Rentals. Does this play into tariffs? Does this play into, Americans building more things? I start to think that it does, right? So if you're buying a piece of equipment, if you want to buy a Komatsu loader, or if you're buying Daewoo or Takeuchi or whatever you're buying as far as commercial equipment, yeah, Caterpillar might be a beneficiary of this as well. But United Rentals starts to make more sense to me than buying a Caterpillar here, right? You've got a lot of companies that are feeling some of this pressure. They still have to build. Bridges are still going to need made. Buildings still need made. Roads still need fixed. So we have the demand for it. Some of these companies might be watching this loader, this piece of equipment, this excavator just went up 15% or 25% based on tariffs, but I still need to get the job done. So maybe I start renting more equipment. I can still write off the rental expense, right? and now you're not necessarily paying the tariff. You're still getting your job done. The businesses can still charge, a decent amount more, because other businesses that are buying the equipment at 25% more obviously have to charge more. So yes, United Rentals has to potentially buy more equipment at a higher price, but some of these companies that want to borrow the equipment, not pay that higher interest rate on actually purchasing the equipment, they're going to be beneficial for it. United Rentals starts to work out a little bit better, and I think that could be a good spot to put a little bit of money right now. That's at least one of my thoughts. So if that's a good thought, let me know. If you think I'm crazy and United Rentals makes absolutely no sense here, you can let me know that too. I mean, the comments on YouTube and everything else is full of trolls. I'll definitely take whatever you say with a grain of salt. Try to take the positive out of it. And if you got nothing nice to say, just keep your comments to yourself. Similar to talking politics all day, every day with people that, it's not getting anywhere. It's not getting anyone anywhere. UPS, that's another one. Man, I know that this one is a battleground, right? It really is. Boy, well, we got some upside. I personally think that we could have some downside here. They are paying a lot in wages. That is not set to change. If the economy slows down, this thing could certainly get hurt, right? I'm starting to see that this dividend, I mean, I like this dividend. I liked it at 5.9%. PE on trailing 12 is 16.4. I tend to like this one. I like it more than FedEx. Not to say that FedEx just, completely wasted 2 days of my life on a shipment this week, but it is what it is. FedEx Freight told me I was going to be there Tuesday between 10 and 4. And they called me Tuesday morning and said, hey, oh, by the way, the shipment's not here. We're going to have to reschedule. So I'd already canceled my day on Tuesday, essentially, to wait for this shipment. And then they couldn't deliver it. So, there goes 2 days of my life waiting for one shipment from FedEx. But either way, both of them have some validity, right? I know some people like FedEx more. I think I'm definitely pretty firm and liking UPS more. I like the dividend more. Similar valuation on PEs and trailing 12 months. Yeah, I mean, UPS has got its problems. FedEx has got its problems. But I think as the economy kind of stays resilient, yes, some people are worried about consumer sentiment, as I showed you guys before. There are some fears, right? But I don't know. I want to keep this dividend. Hopefully they can remain paying this dividend. I think they just reassured guidance on the dividend for at least the next quarter or two. So I'm fairly comfortable here. I understand there's a little bit of pain in this stock price and where this thing has actually come from, up at 154, but we are sitting right down at that 52-week low that was set back in February. So I think if we can hold this level, hopefully we have a little bit of more blue skies going forward. And that is my kind of thought there. Yes, it's very much service oriented, but people have got to be ordering more packages and shipping more things for this not to slow down versus something like United Rentals, that bridges and roads still have to get fixed, right? So a little bit different of a customer, a little bit different, obviously a lot different of a business, but I do think that the sort of service side of it should remain strong. Next one, United Health. I know we've talked about this one a good amount. I know there's some concerns with Medicare and Medicaid, which is not necessarily United Health, but they do have a lot of state programs for insurance. So I still like United Health, right? We're not at the low, we're not at the high, we're somewhere floating in the middle here, but I definitely like the position. I think we got a decent amount of upside. And again, it's a service company that, I know the government's trying to crack down on a lot of prices that insurance companies are able to charge. I don't know how quickly that turns around, if it does turn around. But on the low end, we have 8.5% of upside, high end around 35% of upside. Average price being 22% higher from where we currently sit. Average price being $629.63 if you are just listening audio only and not watching on YouTube. So I like these mixture of service companies right now, right? I think that they start to make more sense the further we look forward. And then getting over to some other plays that we normally don't talk about. I'm looking at KMX, CarMax. What is the play here? Well, my thought is that if we're getting more and more tariffs coming in from vehicles that are made overseas and then imported to the US, that a company like CarMax starts to make a lot more money, right? They have their inventory currently at a cheaper price. And now if new cars are 15, 20%, 25% higher, well, that car that they already own at say $20,000 could now be worth $23,000 or $24,000. And they bought it at what, 16, 17? So their margins could potentially go up, at least in the short term, until, the whole used car value starts to pick up as well. But I think even when that does happen, if people can't afford a new Mercedes at 100 or 105 or $120,000 or whatever that price point may be, maybe we start looking for good quality pre-owned vehicles, and we try to get out of that artificial inflation from tariff demand. So not necessarily just inflation across the board, but definitely inflation across vehicles that are being imported. KMX, I think I kind of like that play right here. 18.5% of upside on the average, 38 on the high side, minus 14 on the low side. So it starts to make sense. We're sitting at 76, average price target being $90.17. And the another company in the same space would be Carvana. They're going to have a lot more upside, but a lot more volatility affiliated with Carvana, right? They're just a smaller company, a lot more meme stock, a lot more, traders coming out of the woodwork for Carvana. So I think that has some changes here to deal with them. So all in all, I'm thinking that, these stocks really tend to play well in this market, being a service-based company and, specialty retailers that are going to be on the used side of vehicles. Yes, they're going to potentially have to pay more on different car parts if they need to rebuild or service a vehicle. Some of these parts might be more expensive, but I still think they're a little bit more protected having those tariffs across the board on vehicles that are going to be imported. So that's a little bit of my thought on at least some service-based companies to look at for this week, or maybe even give you some ideas as to other service-based companies that you might be more familiar with than, this short list that I kind of came up with. Maybe that, kind of sparks your memory. I want to take a look at, XYZ company because it's going to do well. It's not affected by tariffs. It's in that sweet spot of where we can invest right now and not get, just obliterated in the market. So that's what I've got there. And saying that, let's take a look at Tesla. Tesla is going to be American made. We're sitting at 263 right now. They're not going to have so much in the way of tariffs. Most of their vehicles are pretty much fully built in America that are sold in America. Yes, we got Giga Berlin and all the other factories around the world, but they supply those markets. And the factory here pretty much supplies, the US market. Yes, there's a lot of uncertainty. Yes, there's a lot of problems. Yes, people are going after Elon, and there's a lot of pain out there as far as that is concerned, right? I've seen many, many bumper stickers right now with, I bought this vehicle before I knew Elon was a lunatic or whatever. I don't know when this ends. I think we've got to get to a point where we kind of move on from this. I know Elon also sold X to his AI company for $45 billion. So he basically just swapped ownership from, I guess, him to his other company, right? So that happened as well. I do want to take a quick look at Bitcoin. So let's take a quick look as to why we could get a price run up in Bitcoin. I think this is the right page. Yep, we got nobody is safe. Shock Fed Trump warning could suddenly trigger Bitcoin price chaos. Well, Bitcoin has fallen back down towards 80,000 after soaring to 90,000, even after the confirmation of a long-awaited Bitcoin game changer. Bitcoin is found to be outperforming Tesla. Arthur Hayes has predicted the Federal Reserve will trigger a Bitcoin price boom in April. We kind of go on to read, there was a seminal change in the Federal Reserve Chair Jerome Powell's tone at the last Fed board meeting. He basically saying that keeping the interest rates on hold after kicking off this rate cut in September. So we kind of go on to say that, April tends to be the second best month for Bitcoin, even though it hasn't really done so in the last 3 or 4 years. But I think the average gain in April was like 36%, second to November's 40%. The tariffs don't matter anymore to Powell, and they shouldn't matter as crypto investors. I mean, tariffs really shouldn't have any effect on Bitcoin as far as I'm concerned, but I know that there's going to be some price volatility due to the fact that there's going to be less money out there if people are spending more in other places. Tariffs have roiled the Bitcoin price. Crypto and stock markets are set to hit goods from Canada, Mexico, and China from April 2nd. Bitcoin price could be about to rebound towards 90, according to 10x research founder Marcus Thielen, who has predicted a combination of Trump softening on tariffs and an increasingly dovish Fed is setting Bitcoin up for a recovery. Bitcoin is attempting to form a bottom, supported by Trump's recent shift towards flexibility on the upcoming April 2nd reciprocal tariffs, softening his earlier rhetoric. Thielen wrote in an emailed note, a look past short-term inflationary pressures, laying the groundwork for potential future easing. So we've got, a little bit of a dialing back on some of the rhetoric that Trump was talking about on tariffs. And hopefully this could be something that eases a little bit of the spending and the inflation that's out there. And also the fact that, the Trump is a little bit dovish. They're, still set to lower rates going forward. And the fact that the rate, dropping actually happened last September, and we're moving forward from that. So I think there's a lot of different things here that can bring the price on Bitcoin forming a solid bottom and then moving up from here. I've been buying Bitcoin through these dips. I've been talking about that. I've been buying a lot of these stocks, even the growth stocks that I've been saying might not be the flavor of the week. I've been buying those as well. I know some people are saying this week with tariffs could be, pretty rough. But part of me thinks that with what we've already done here and the amount of sell-off that we have seen on, the NASDAQ, the Dow, the S&P, if I'm going back over to E-Trade here, we were down 2.7% on the NASDAQ on Friday. We've already seen this sell-off. I don't know if this continues or we start to get a role reversal and we start to see people buying on the fact that we're kind of selling off on all the hype, all the rumors, and now we're going to buy when the actual news happens, right? So maybe we start to see a switch. Some people think that, the fact that all the news is already out there, we kind of already know what's happening is kind of a good thing. And that now Trump is kind of easing some different positions in some places could be a solid thing. So again, we're just along for the ride at this point, guys. We know a little bit about what's going on, but ultimately we're seeing some of the swings that are in the market. So, what do we want to look at of the stocks that are on our 12 for this year? We've got NVIDIA, Tesla, Meta, Amazon, Eli Lilly, NextEra, CrowdStrike, Costco, Bank of America, AMD, and IBIT, the Bitcoin ETF. Now, if we go on the theme of service-based companies, there's really not many on this list. The only thing that is going to really, really fall into a service-based company, I would say, would be NextEra Energy, right? They're going to be a utility company. They're providing people with power. There's not so much in the way of tariffs that are going to be tied to NextEra. People are still, complaining about their energy bills that they've been paying over the winter. I know I just had one that was awful, but and I had to deal with BG&E with that, which actually went really well. Was a very smooth conversation. It's a whole thing, right? My utility bill, I don't have a smart meter. I opted out of that, and then they didn't read it from October 22nd until January 24th. So I had a bill of 3 months, and then they read it twice in February. It was a whole problem. So I paid the February bill, the first one, but then the second one didn't have that the first one was paid. So it was a whole problem. So it was like a $1,700 electric bill, which then got kicked back to me because of the whole difference between payment one and payment two, and then it was like $1,000 bill because the first one already got paid. It was a whole nightmare. But anyhow, it got handled. It's still a service that we have to pay for unless you're completely solar or providing your own energy. Which, if you are, more power to you. I wish I could. I probably could, but we need to figure that out. CrowdStrike, they provide a service. They're not really selling so much in the way of product, right? Yeah, software IT services. NVIDIA, definitely not. Tesla, no. Meta, they're selling advertising, but you got to a questionable consumer. I still really like Meta. Sorry, guys, I'm going back and forth between the two. CrowdStrike at a 17.5% of upside. Next Era was at what? We've got Next Era sitting at 22 with zero downside, right? 5% of upside on the low end. CrowdStrike, I didn't look at that one. I got to imagine there's some negative, -2. Yeah, maybe we'll look at a Next Era right now for the fact that we want a bit of a service company. We think that, renewable energy is definitely a solid play. I think that could be the play for this week. So last week we did buy Costco. Now we are looking at Next Era. So I will be buying $200 worth of Next Era. Should be roughly about 3 shares. Maybe I just go straight for 3 shares. Costco, we bought it last week. Was at what, like 905, and now it's up to 929. So decent little gain here on Costco. I definitely think that Bitcoin is making sense here as well. Now let's take a look at the chart from the week on this one. Let's take a look at the 5-day. We've got we got a little bit of upside here, right? We got where were we? 929, and this was at why can't I see the price here? Sorry, I messed with the chart. Where is the price? I can't see it. Oh well. I know when we were looking at this thing last week, it was sitting right around 900. So we got that. IBIT. IT. This one is sitting at 47.56. Snapshot. Where are we on this one? And where has it actually been? So it was up to 61.75 on the 17th of December, 28.23 on August 5th. A little bit of expense ratio there, quarter point. Year to date, this thing has fallen. Anticipating, softening rhetoric and a dovish Fed. So we're thinking that this thing could get back up somewhere in the mid 50s, maybe by the end of April. Hopefully we can see the same on Bitcoin. Hopefully we can start to see Bitcoin rise back up to around 90, 95. That'd be pretty awesome for those that have been buying. And again, right, if you were willing to buy Bitcoin at 100,000 and now it came down to 80, why are we not buying, right? If you're willing to buy it for more, you should be ready for it to go cheaper. If you really think that buying it at 100 means it's going to go to 130, why would you not buy it at 80? That's my question to you. So take a little bit of the psychological out of the play. Look at what it's doing and where it's going, not recently what happened, right? I mean, yes, we got to look at that, but we got to have that conviction of why I'm buying it at 100. You got to know that it can come down. I mean, it's Bitcoin. It's not, Coca-Cola, right? There's definitely going to be some more volatility there. Coca-Cola is going to be tried and true and, fairly predictable. But even with Coca-Cola, we had this big swing here from 63 up to, pushing 70 in roughly a month. So again, take a look at your favorite stocks, man. There's going to be some deals that are going to be out there. And I think we are going to want to take a look at them, at least for that long-term investor. If you're swing trading or you're just trying to make a quick buck, it's going to be a rough market for you. But I think long-term, some of these stocks that we can purchase right now, we're going to be happy that we purchased them. If we zoom out, we look back 5 years in 2030, I think when we take a look back, we'll be like, man, I made some good plays in 2025. And I can say that now from 2020, right? I made some great plays during COVID. And I'm happy for it, right? So, Meta at 576, 32% of upside, man, I think that is a sound purchase. And this actually is in the category of software and IT services as well. So if you're looking at advertising as a service, maybe Meta's the stock for you. So yeah, that's what I got here, guys. That's all the time I got. I will be buying, what do we say? We are going to be buying Next Era Energy, so ticker NEE. And that is all that I've got time for today. So thanks for stopping by. Please make sure you like, subscribe, and share, and I will talk to you guys in the next one. Take care.